Look at all of this crap over here. Look at this. Long-term treasuries. That's what's funding my police workforce while I live in the murder capital of America. What the fuck? Why is that our savings account? Look at this crap. Look at here. Long-term treasuries, aggregate bonds, U.S. real estate. Sweet. Yes. Now teach my children how to become adults and protect me from crime. Unbelievable. Meanwhile, look at the only participant in the top right. The king. Lion of the jungle. And you are not going to survive owning bonds and stocks. The 60-40 portfolio is dead. Absolutely dead. You have to find room for Bitcoin. And even Harvard agrees. I like this tweet. In 2018, Harvard says Bitcoin is more likely to hit $100 than 100K. In 2025, Harvard buys over $100 million worth of Bitcoin at over 100K. Everyone gets Bitcoin at the price they deserve. You've figured out that Bitcoin is the best money in human history to have ever existed, and you decided to allocate 1% of your time and energy, your effort, your labor, your future? Either you're an idiot or you're a liar.
For decades, Wall Street has pushed the 60-40 portfolio to 60% stocks, 40% bonds as a gold standard for balanced investing, but according to Mueller's, that playbook is now dead. By the way, if you're enjoying this breakdown, make sure to like the video, subscribe, and drop a comment below. It not only helps the channel grow, but also signals to the algorithm to share this content with more people like you. Let's continue.
What's the way out? What's the only way out? Let's go back to this. It's step 3 is the problem. The money they have is losing value. Listen, you cannot get out of this if you keep buying bonds. Like, the bonds are dead. The 60-40 portfolio is dead. These endowments, these pensions, these sovereigns, they have to start owning something else. This, I cannot overestimate how big of a deal it is that Harvard bought over $100 million worth of Bitcoin exposure. This is long-term capital preservation. This is the creme de la creme for long-duration bonds, for commercial real estate, for a bunch of bullshit legacy fiat crap. That's the Harvard endowment. That's the Chicago pensions. That's a bunch of the biggest sovereigns in the world. They can't live on bonds anymore. The largest cities in America are eroding. They're eating itself. 5 straight years of bond losses. Commercial real estate marked down 85%. To me, this was the shot heard round the world. Trump opening up 401ks to Bitcoin and gold exposure is massive. It is a direct attempt to save these savings accounts in this country. You are not going to win, and you are not going to survive owning bonds and stocks. The 60-40 portfolio is dead. Absolutely dead. You have to find room for Bitcoin. And even Harvard agrees. I like this tweet. In 2018, Harvard says Bitcoin is more likely to hit $100 than 100K. In 2025, Harvard buys over $100 million worth of Bitcoin at over 100K. Everyone gets Bitcoin at the price they deserve. This is right here. You could put this on a t-shirt. Stay humble and stack sats. But this is it, guys. This is it. The 60-40 portfolio is officially dead. The United States of America is literally siphoning Bitcoin into the 401k of Americans. Pensions, endowments, sovereign wealth funds are buying Bitcoin because you cannot sustain and survive on bonds. You cannot sustain and survive on a portfolio basket index of stocks. It's dead. And the magnitude of what this means for both Bitcoin and all of our future is profound. This is absolutely a new monetary era. The amount of capital that has to flow into Bitcoin and find a new home is profound. And this is no longer speculative. On this show, I spend months, I really think so. If I ran a pension, if I were in charge of funding teachers in Chicago, but now we're living it. That's an executive order from the President of the United States. That is the most prestigious university, not only in America, in the world, that has $100 million+ Bitcoin position. This is Bitcoin and gold risk-adjusted returns. Look at all of this crap over here. Look at this. Long-term treasuries. That's what's funding my police workforce while I live in the murder capital of America. What the fuck? Why is that our savings account? Look at this crap. Look at here. Long-term treasuries, aggregate bonds, U.S. real estate. Sweet. Yes. Now teach my children how to become adults and protect me from crime. Unbelievable. Meanwhile, look at the only participant in the top right. The king. Lion of the jungle. And here's the thing, guys. People don't want to admit it. Money naturally competes. It does. It's true. There is no second best. There's no such thing. And I've seen people reclip this. I don't know when I did this interview, but I've seen some reclippings of me saying this quote, and so I'll repeat it. When you understand Bitcoin, it's not 1% of your portfolio. I can't stand when people say, no, I totally get Bitcoin, and that's why I made a 1% allocation. It's like, excuse you? So let me get this straight. You figured out that Bitcoin is the best money in human history to have ever existed, and you decided to allocate 1% of your time and energy, your effort, your labor, your future? Either you're an idiot or you're a liar, because you either don't understand Bitcoin and you're lying that you've spent the time that you do, or you're an idiot. And when you found the winner, when you found the solution, you took 1%. Why would I allocate 99% to the loser? Explain that to me, smart man. There's one winner. I don't know how else to show this in visual form. There is one thing in the top right. And that's how money competes. It's highly competitive. What's the best way for me to persist my time and energy? Period. And here's the deal. When I say the 60-40 portfolio is dead, I'm not just talking about bonds, and we've talked a lot about this on this show. Stocks are a scam. Equities have been a scam. The idea that they've been performant is just because we've been measuring in dollars. If you measured in gold, we've already lived through a Great Depression level of performance in the stock market. We've been over this on this show, so I'm not going to spend a lot of time on this topic, but look at this. Ouch. The S&P 493, that's the S&P 500, excluding the Magnificent Seven, is expected to deliver just 2 to 3% net income growth. By the way, guys, that's, again, you think you're outpacing inflation with that? Newsflash, you're not. In Q2, Q3, and Q4. That's slower than inflation, meaning most of the market is barely growing in real terms. Measured against this, U.S. equities are quite expensive. In other words, they're more garbage. Trump is opening up the 401k and saying, get these pieces of trash out of the populace's savings so that when the dollar gets debased and we reorder capital flows and get ourselves out of this mess, they actually own something real. People say, oh man, yeah, my stock portfolio's up. But weird. I have to downsize the size of my apartment. Weird. I have a smaller grocery budget. Weird. I can't afford vacation this year. But no, trust me, man. My fucking stock portfolio's booming. Are you an idiot? Are you an idiot? In real terms, Stocks are getting murdered. If you want to buy stocks, just buy the Mag 7. That's the performance.
Here's where it gets even more interesting. The Federal Reserve recently admitted that their inflation measurements have been way off, massively off. Over the past 50 plus years, the dollar has gone from buying 1/142nd of an ounce of gold to just 1/13,300 of an ounce. That's an 8.4% compound annual loss in purchasing power, far above the so-called official 2% inflation rate. So if your savings account earns 3% while real inflation is closer to 8%, let's be honest, you're getting robbed blind.
And we go on to Mark Andreessen. Look at this graphic. S&P top and bottom performers. So the orange is the top 10. The red is the other 490. Okay. And the dotted line measures in real terms. Not any of that nominal garbage. Everything goes up in dollar terms. Everything. This microphone has gone up in dollar terms. This glass has gone up in dollar terms. My water bottle, I'm sure that this water costed $1 10 years ago, and today it costs $4. Wow, look at that performance. I should have invested in this water bottle. How about no? How about the dollar just sucks and gets debased, and fiat currency is a scam? How about that? So measuring things in real terms, you realize that not the majority, not some, 493 of the 500 companies in the S&P 500 do not perform in real terms. There's only a handful, like half a dozen companies that are actually outpacing inflation and delivering productive value to a portfolio. And of the S&P 500, exactly zero, where's my camera? Exactly zero, the number less than 1 and above -1, zero, are worth owning more than Bitcoin. Interesting timing and an admission, the US dollar has fallen from 1/42nd ounce to 1/3300th ounce of gold in the past 54 years, a compound annual growth rate of 8.4%, which, since everyone suddenly cares about economic data accuracy, is much higher than the official reported US inflation rate over the last 54 years. So here we have the Federal Reserve now saying, well, hold on a second. We've been marking gold incorrectly on our balance sheet. If we remarked it, we can stack some sats. Oh, and by the way, this is an admission that our ability to account for inflation has been blatantly wrong. 8.5% surely is a lot bigger than the 2% you scammers have been advertising to the American public and the global population for how many decades?
Jack Mallers puts it plainly: buy Bitcoin. Not for hype, not for FOMO, but because the old financial system is collapsing, and this is your lifeboat. The 60/40th portfolio is dead, bonds are worthless, stocks are illusions, the dollar is debased. Meanwhile, Bitcoin keeps running block after block, tick after tick, without intervention, without bailouts, without manipulation. This isn't just a hedge anymore, it's the foundation of the next financial era. If you're still on the sidelines, it's time to ask yourself, do you truly understand the game you're playing? Thanks for watching. If you found this valuable, the next video is even better. Click it now, and let's keep going.